Wish you can see with these eyes, baby, I do. All the pain that I've been through, all the responsibility that was put on me. But I held my way like I was supposed to. Like I was supposed to. Like I was supposed to. Like I supposed to. But I held my way like I was supposed to. Like I supposed to. Staring.
Hey, it's Sully, and this is episode 544 of the Orange Pill Investor. And today I want to talk about utility value a little bit because the gold bugs and the silver people are getting their flowers this year. Well, last year, I guess, and probably this year. And maybe doing a little bit of a tap dance and saying, see, I told you, precious metals have utility value. Bitcoin doesn't have any utility value. And there's been some good arguments that being able to hold Bitcoin as a sovereign asset is utility value in itself. But I'm going to go ahead and make the argument that the utility value that they're talking about, meaning like, hey, the silver can be used in this manufacturing process, or gold is jewelry and used in manufacturing itself. All of those things actually make money worse. And the fact that Bitcoin has no utility value other than money is the feature, not a bug. And it kind of goes like this. If we suddenly just, or if the government just declared that paintings were money now, and we're going to denominate different types of art as money, and all paintings were pennies, right? That was going to be the lowest form, the lowest denomination. Then you're going to need 100 Mona Lisas just to buy a candy bar. And like, obviously that's absurd to even think about, but that's taking utility value to its extreme logical conclusion. And so the principle really is that it erodes the market signals. So the free market is supposed to price things. And this is why, the government had to stop making pennies in the first place. Because if it costs more to make a penny than the denomination of the penny, then it makes sense to just pay a penny for the copper that's worth like whatever, $1.1 cents, hoard it and melt the shit down and then just dump it on the market. So there would be an arbitrage. And so that's why having utility value actually destroys the value of the money itself. And it creates these perverse incentives. So now you're kind of like trying to play the market and okay, do I hoard silver and hold it for 10, 20 years waiting for there to be a physical shortage, and now we've got a short squeeze? It just doesn't make any sense. And I kind of snuck this in here, and I debated on the title or whatever, because even though this is kind of like a gold bug, silver bug gotcha, it also, I think, proves once and for all that spam is not money. It cannot be money, and it makes your money worse. And the reason is because if you create if you have a Satoshi and you've intentionally made the value of that Satoshi like unspendable, and its only value now is the image that it's associated with, and forgive me for comparing monkey butts to the Mona Lisa, but I think it's a very similar comparison in that if you've got a Satoshi that's supposed to be worth one Satoshi, and now it's someone is willing to pay more than it's actually worth, that is creating a free market distortion. And it is not allowing the free market to do what it's supposed to do. It would be just like saying, okay, we're going to make pennies with gold, like 24 karat gold. That just doesn't make any sense. So if the utility becomes worth more than the unit itself, it ends up ceasing to be money. And I think that's a pretty solid argument that spam actually makes money less, makes our perfect money less perfect. And anything that's making Bitcoin less perfect, the other way to describe that is it's an attack on Bitcoin. So I think that's all I've got to say about that. I can put myself in the precious metals and the spammers crosshairs all in one video. So with that being said, let's keep it moving and take a look at what's going on with Bitcoin and Bitcoin derivatives. I'm loving the fact that we're 5 days into the new year, and I can just sort by the year-to-date chart, and we're actually up. It's been basically like a year since that was possible. So we all kind of have a fresh start here. And my 2025 thesis was absolutely terrible. I didn't lose all of 2024's money, but it was definitely a volatile ride. And it reminds me a little bit of one of the traps that Carl Dom, the real P&L guy, says about running the wheel, and that there's these huge, massive swings when your stock price drops 50%. And while that's true, as far as I can tell, he's not a Bitcoiner. And so his thing is that, you're stuck bag holding, and then the stock may never come back. But as a Bitcoiner, you know that that's not true. For the first time in human history, there's an asset that is going up forever, Laura, right? You're never going to be wrong with Bitcoin. You're just early, as long as you're willing to hodl, you are just early for the next bull run. Now that does make it pretty painful, especially for like a strategy where if you're buying at higher MNAVs and then the MNAV contracts as the share price is not keeping up with Bitcoin, then that just makes that hodl that much more painful. Because as Bitcoiners, we know we can just diamond hands. And Bitcoin is not going to have an expiration date. It's a sovereign asset. You can keep it in self-custody. But with stocks, you're exposing yourself to third-party risk, and they can change laws, they can change the interest rates, the economy can do whatever the hell it wants to do. The executive team can make mistakes. They can have good, bad, or indifferent earnings reports, and the market can react badly to a good earnings report. It can react favorably to a bad one. The market's just completely irrational, and you're not going to necessarily be able to make sense of a stock's share price, because you can do all of the technical analysis, you can do all the fundamentals, you can research the company. Like, I was really impressed with Adam Livingston's analysis on Metaplanet, and it just makes sense that of the three companies that he compared, Strategy, Metaplanet, and Strive, Metaplanet actually has an advantage that the US companies don't, in that they're actually borrowing the weaker currency. So if you accept the debasement trade of wanting to borrow US dollars to buy Bitcoin with, we can do that personally. We can do it through a company like Strategy. And if you accept that that's, going to benefit you, then it makes even more financial sense to borrow the absolute weakest currency that's getting debased even faster. And all of the all of the currencies should be deflating, getting made less valuable compared to the US dollar. So that was a pretty cool advantage, I think, that he pointed to. And it made me a little bit antsy about not having any Metaplanet exposure. I had always been, meaning to, like, hey, once I can get it on Robinhood, sure, maybe I'll grab a small bag or something. But just from having been able to interact with Dylan LeClaire early on in the True North shows, and hearing how other people, were actually saved. Like, they saved. Dylan LeClaire was putting out some warning bells on, I can't remember if it was Celsius or one of those services where you lock up your money for yield. And I know someone on X that actually, he ended up saving them a bunch of money because Dylan was sounding the alarm bells and, like, hey, you got to get your money off of this thing before it shits the bed. So Dylan's a real one, and he's a real Bitcoiner. And so, if I knew nothing else about Metaplanet other than he was associated with them, I think it would be worth owning a piece of it. But Adam's analysis also really kind of opened my eyes up to the, like, yeah, it's kind of obvious. The weaker the currency that you borrow and pay back in even weaker and weaker and weaker denominations of that currency, the better. And I think they were only paying like 5% yield, which is kind of crazy. Whereas Stret's paying 10, and I think SATA's paying whatever the hell it is, 11, 12, something like that. So yeah, that's definitely a feather in the cap for the Metaplanet hodlers. So eventually I'll have a few shares, and it's kind of crazy because I have like $50 on Fidelity, and if they still charge $50 for OTC, then I'd have to deposit a couple dollars just to even make that worth its while. So we'll see. What's up, NYC? First rolls of the new year. Yes, sir. What's up, Dude Face? What's up, AB? I love seeing these younger guys giving the old guard a run for their money. Yep. Yeah, it's funny because there's some option sellers that I've learned a lot from, but they're just dinosaurs. And they don't get Bitcoin and don't need to. Like, Tom Sosnoff is a legend, I think, in the option seller space, but I don't think he understands Bitcoin. And when you've made that much money your whole life, like, the dollar can't deflate fast enough for somebody with that much wealth to, like, go broke. So they don't need to understand it. All right, so let's take a look. I probably won't even be rolling. I don't know. I could be wrong. I'm feeling good about this. I've been chipping away at my margin use here. I was stuck at 50K for like all of 2025 because I just couldn't bring myself to close any positions down. It was like I need to be backing up the truck and adding positions, not closing them. So, but in December, I was kind of like, you know what? There's going to be some tax loss harvesting here. I'm just going to sell pretty aggressive covered calls and try to chip away at that. And fortunately, I was able to do that. I already rolled Tesla, so there probably isn't anything to do here. Cypher, for some reason, is extremely capital efficient. And these ones that I've had for, wait, I've only had these, so there's a couple of weird things here too. This says I've had this open for 5 days, but it's only because I combined accounts. So when it moved it from the other account to this one, it's saying this has been open for 5 days. But this is one that I sold actually at 45 DTE, and I've had this for 17 days. And it's finally to the point where I can roll it. So this one hasn't been optimal, but if I go ahead and roll it for a credit, it's fairly aggressive. It's like, the expected move would be $13 a share. But if I roll this, you can see that not only am I getting a credit, but it's increasing my buying power effect. So my my margin use by taking this position, I mean, and if you're doing this, this is not free money, so you're gonna have to keep track of this yourself. But a cash secured put means you have to put up the cash, right? In Robinhood, if I try to sell a cash secured put, and this is a margin account too, but if you're in a cash account or if you just don't have enough buying power. And what was this? This is February 20th, the 15 strike, right? So actually, I've almost got enough for this. I didn't realize I must have had something called away on Friday. But, oh, and actually, I will be able to make this trade because it's going to give me $100 credit, which is going to put me over the 15 that I need. Anyway, here's the point. It's going to cost you, you have to put up 1,500 in collateral. But let me go and let's do the 16 because I don't think I'll get paid enough. Yeah, I still might get paid enough. Yeah. Anyway, point is, with Robinhood, it's actually going to deduct the 1,500 from your account as if you had already been assigned the shares, and it's going to lock up your buying power. But Tasty Trade is using some other type of way to calculate this, and my cash balance, and I believe my crypto buying power should also be the options buying power, I believe. So let's just take a look at this. 31,816 and 174,730. 31,816. Oh, actually, you know what? I forgot to share without volume. What did I say? 31,816. All right. Slightly smaller credit should get this filled. Yeah. So this actually chipped away at my margin. It was 31,816 before. So you kind of got to keep track of this yourself. It should be saying, okay, we're going to hold $1,500 in cash just in case you get assigned here. And it should be like increasing my margin use instead. But they're kind of giving me a free pass and giving me the benefit of the doubt that I'll be able to roll and avoid assignment, apparently. But this doesn't mean that you can just YOLO 100 of these damn things and pump your buying power and like it never come, the bill never comes due. But it is a little bit more capital efficient if you want to take some positions and you're actually not getting charged margin interest on that position as long as you can avoid assignment. All right, same situation here. I'm going to roll these out. And I might as well just roll them all to the same expiration date so I can manage them together. And someone was asking me, can I explain why I'm choosing the strikes I am? And I probably should do better at that. The short answer is, to a certain extent, it doesn't matter. I don't think there's a theoretical edge of, for example, like the 20 deltas versus the 30 deltas. You're not trying to give me a fill though here. This should fill. Okay. And I've gotten lazy because I've been using the Tasty Trade tools. Anywhere in this red band is the expected move, and I don't even know how they calculate it, but it's generally somewhere under one standard deviation. And I think that for 45 DTE, which is Tasty Trade's sweet spot, where their research says that out of the money options the theta accelerates the fastest at 45 days to expiration. It really starts to ramp up at 60. Like it barely starts to ramp up at 90. Some option sellers actually go out to 90 days, which I think is crazy, but it's still, theta is accelerating, but it's very, very small acceleration. And then this acceleration continues, and they generally roll these every 2 to 3 weeks, hopefully for a credit. And the reason why they don't just take these to zero is not because theta stops accelerating at 21 to 25 days to expiration. It's because gamma risk starts to increase. So at 0 DTE, gamma basically goes to 1. Yeah, and delta goes to 1. Delta keeps flopping between 0 and 1. If you're in the money, it's 1. If you're out of the money, it's 0. Right? The options are going to be worth 0 if it's out of the money, and it's going to be worth dollar for dollar if it goes in the money at 0 DTE at 3:59 p.m. on a Friday. So if you want to collect as much theta as possible while avoiding gamma risk, their kind of standard operating procedure is sell the out of the money option. So whether it's selling a cash secured put, or coming out here if you already own 100 shares and selling a covered call, and then riding that for 2-3 weeks and trying to roll it for a credit. And so with that being said, like anywhere in here between the one standard deviation and I don't know, halfway to at the money, this is all fair game. And I don't think that the 26 delta, or excuse me, the 8 delta is any different from the 20 delta in a theoretical sense. I think the reason I do this is more for a mechanical advantage based on Tasty Trade's research and theta itself. Not on like, oh, okay, I'm going to make more on the 13 strike than I would the 15. Uh, Obviously, you can make more guaranteed premium at the 15, but if Cypher drops to $10 a share, now I've bought these for $15 a share. Whereas if you sold the 13 strike, you're collecting half the guaranteed premium. But if Cypher shits the bed and drops to $10 a share, now you've only paid 13 a share for them. So do you want to collect more guaranteed profits, or do you want to build in a larger potential discount? I really just don't care. Especially since, the mining stocks are a derivative of Bitcoin, and as long as they're not managed poorly, they should do well as Bitcoin does well. And I think Cypher and Iron also have the benefit of being like AI plays. For all I know, they may get out of the mining business altogether at some point. I really have no idea. If they ever did that, I guess you could still be an AI company, like for data centers, and still stack sats with the profits that you're charging, whoever you're charging for your services. In that sense, I guess I would continue to invest in them. But if they just moved completely over to an AI play and held cash, then I would probably exit these positions. But as long as they're still in the Bitcoin mining category, I think they're fair game for an orange pill investor. AB says, I wish I had bought more leaps last week, allocating 75% to 250, 10% to 1750 for this month's allocation, most likely February, then back to sold puts. Yeah, man, when I saw Strive pumping, and it's funny to say that Strive is pumping when it's like still a penny stock, like it got to $1, but you're up 20% year to date, so that's cool. Can't beat that with a stick. Any help just makes you feel good. But I know you've got a long-term thing, so you're not really worried about the short-term prices, but it's still got to feel good. Both the 1750 and 250 were up 20%. So Buffalo, happy SATA and stretched legs in the port. Optionality is too good. So are you using that for your dry powder, or is that like a forever hold kind of thing too? Good safety mechanism for cash secured on Robinhood. I basically used all my margin for SATA stretch instead. Yeah, that's a good point. So I think I dumped them all in this account, but we'll see in a couple of my other accounts. I was selling cash secured puts, and since I still had a positive cash balance, like Tasty Trade didn't count it against me, I was like, screw it, I'll just take that and buy SATA. And that dropped my buying power, close to zero. And as long as it does stay stable-ish, then if I were to become assigned, right, then I can just go, and I didn't want to dip into margin, then I could just crack open my SATA in case of emergency, break glass. What's up, dude face? Love this Monday morning pump. Waiting for a breakout that holds. Yeah, as Bitcoiners, we're kind of like always. We're always trying to be a little edgy and like, oh, we don't care if the price goes down, and I hope it goes down more so I can buy more and all of that shit. But I don't want to say people are faking it, but it's kind of just like we cope so hard that it seems like we're being hardcore or something. But yeah, it wouldn't surprise me if we get some some serious volatility. Maybe Bitcoin pumps for a month and then it shits the bed again. We've still got to kick. We've already kicked tariffs down the road, and I think that talk is going to come up again. What, February? And so all of the people that tax loss harvested are going to be buying back in January, but then what's going to hit next? They don't really have to pump the market hard for the midterms until what, like May, March, April, May. So they could give us a fake out. They could pump us for a month, dump it again, flush the longs out, flush the shorts out, do the fucking dumb shit that they do. And as long as you're not trading with so much leverage that you get liquidated, we know how to survive that shit. Don't panic sell, don't FOMO in at the top. Cough like I did last November. Not well. I get damn. It's 2 Novembers ago. So anyway, yeah, just be mindful. If your exchange is kind of sneakily giving you a little bit too much rope to hang yourself with, just be mindful, right? And it may be doing this too because the size of this account probably can't handle this much strategy. I did buy some Tesla, so that balances this out. Maybe half and half Tesla, half strategy at this point. But, all of last year, I had like 95% of the portfolio was in strategy. So it was just a huge concentration risk. So maybe Tasty Trade's like, look, we'll just please take another position. But actually, it's got to be something unique with Iron because, or excuse me, with Cypher, because if I try to do the same thing with Iron, I do not get that level of benefit. Now, this is still not terrible, right? They're only counting half. They're only counting half of Iron's price against me, right? They're basically saying, okay, you're trying to sell the 40, but we're only going to count, instead of 4,000 against you, we're only going to count 2,000 against you, which, makes Iron pretty capital efficient as well. But this is a pretty standard margin calculation. But like, this is 3-to-1, meaning I'm going to get a $60 credit and they're only going to count 180 against me, right? Selling the 13 strike, they should be counting a $1,300 debit against me. And if it was at the same rate as Iron, they would cut this 1,300 in half and make it 650. But this is a third of 650, less than a third of 650. So while this is extremely capital efficient, and let's see, IV rank on Cypher. Maybe it's due to the IV rank as well. And that's kind of silly because all of these mining stocks are still built on top of Bitcoin. So like the IV rank shouldn't really be like making Iron that much more risky just because the IV rank is higher. But maybe that's what it is. I don't really know how their calculation works. I wonder if Gok knows. Maybe I'll have to ask. All right, so this isn't quite ready until it's below 65. So I don't really need to like rush and roll this. It's been open for 12 days. If I keep it open for another week and allow this to get down under 65 cents, that would be a little bit more optimal. But if I just didn't want to manage them separately, I could totally roll these out to February and roll them out 2 weeks for a little, for a decent credit. This, none of this is an exact science. So So if I was teaching a class, I had delusions of grandeur that I might put on a course, maybe like a daily seminar, and I would probably do it something like this just to make sure that nobody was wasting my fucking time. I would charge almost like a deposit, and then if you actually trade using the principles, then you could just have your deposit back. But if you waste my fucking time and listen, and then still YOLO like weekly freaking buying weekly calls, um, and then want to complain that you're going broke, that would kind of piss me off, and I'd be like, all right, you're not, you can't have your deposit back. You violated the terms, and the only real requirement to satisfy the way that I would the way that I trade options selling. And I heard, I believe it was Tom Sosnoff say this in one of his thousands of videos. All you really have to do is sell an option and have some kind of positive theta here. That's it. That's all it takes. You've got one fucking job to do. Can you reduce your cost basis and increase your chances of success? Will it limit your total potential profit? Yes, absolutely. But the point is, you can sell an extremely aggressive at the money put. You can buy 100 shares and instead, sell the 18 covered call. Both of those things would give you a net positive theta here. You can go out if you want to do the classic, go the expected move. You want to sell at the one standard deviation. I really don't give a shit as long as theta is positive. If you sell a put or you sell a covered call, that's really the only damn thing that matters. Somewhere between, 7 days and like 60, really, like 46 is just optimal according to their research. But going out, 52, 53, 55, 60, like it's not optimal, but it's still going to give you a positive net theta. So any strikes between, where is it? Any strikes between at the money and like one standard deviation. I mean, hell, if there's any premium to be had at two standard deviations, I really don't give a shit. But going out beyond one is probably going to get into the sub 10 delta area. So that's kind of like a waste of your time. Well, it's a waste of my time. I don't know what you like to do with your time. But, same thing with the covered calls. Anywhere between buy 100 shares, sell at the frickin' at the money or just above at the money, all the way out to one standard deviation. That's all positive theta territory. Same thing for 45 DTE. You want to sell cash secured puts at the one standard deviation? Fine. At the expected move? Fine. Like anywhere out of the money. Same for covered calls. That's all, and I'm not a financial advisor, so I can't actually give financial advice, but I'm really just repeating Tasty Trades philosophy. That's really all it takes. Completely separate from that is making a directional bet, right? Because I've decided that Bitcoin's going up forever and strategy's going up forever at some kind of factor greater than Bitcoin because they're using leverage. And so, things like November 2024 can happen and there can just be euphoria. So this is a completely separate strategy outside of option selling. right? I've got these attack the tail type things. This should be thought of completely separate from an option selling strategy. And I, you know, really just doesn't make sense to me on stocks that are not Bitcoin derivatives, like Chipotle. I'm not buying calls in Chipotle. They might work. I really don't fucking know. Um, but I just can't think of a reason why I would even care whether Chipotle went up or down, to be completely honest. So um, I like to think of these two things separately, but then at the same time, one of the mistakes that I made in 2025, which would, if we get the 2026 that we think we'll get, basically if we get the 2025 that we thought we were going to get last year, then all of these things will make money instead of lose money like they did last year. But at the same time, what I should have really done was made sure that these drags on my positive theta didn't actually outweigh my positive theta. And there were times during 2025 when I had so many long positions that I was a net option buyer, and um, that would have worked in 2024, and hopefully it'll work in 2026. But in 2025, all of these positions were absolutely destructive to capital. So I need to do a better job of balancing that. So I'm gonna try to not to go a little too crazy with that shit this year. I could YOLO into these and like just trying to revenge bet myself back up to my peak 2024 levels, but I think that's a little bit too irresponsibly long. Yeah, these are not ready to roll. Not ready to roll. Actually, they've only been open for a couple of days. Same here. Not ready to roll. And then these cash secured puts are let me see, what were these? Can't remember if I was getting as good of margin use out of these. Yeah, so for some reason, Cipher and Strategy, depending on the DTE and the strikes, this is also giving me an insane capital efficiency. But again, you have to set up your own guardrails here, because apparently Tasty Trade is going to let me obligate myself to a $13,000 position and only reduce my buying power by $500. That's kind of ridiculous. So yeah, I could open up a shit ton of cash secured put positions that I can't afford. Technically, Tasty Trade would let me do that. And I kind of went a little hog wild with it. I was like, holy shit, let me just open up a bunch of these. And then I was watching what was happening to my my buying power here, and it wasn't it was not increasing my margin use. So I was like, all right, cool, let's have at it. And I was a little bit tempted to YOLO. And you're like, all right, well, let's just sell 20 of these bad boys and collect what, basically $900 a pop. I probably could have wiped out my margin use, almost 2/3 of it, but that would obligate me to a bunch of positions that I can't afford. There would be no way with what I've already got stacked here that I would be able to afford 20 cash secured puts at the 145 strike. That would be that would liquidate me for sure. So I guess it's kind of reminds me of that saying, is like, just because you can do a thing doesn't mean you should. So while these cash secured puts are extremely capital efficient, depending on your margin rules, it doesn't mean that you should just be like, oh, okay, I'm gonna put the pedal to the metal and and add too many positions here. So yeah, over the next couple of weeks, I'll be looking to just close a couple of these positions and maybe roll out half of them. So we'll keep an eye on that. Okay, so the Buffalo says that the expected move is the cost of an at-the-money put and a call added to the underlying price. All right, let's take a look at this. Expected move is the cost of an at-the-money put. So an at-the-money put would be 1,400 and a call added to the underlying price. All right, so basically 1,400 and 1,600, which is $3,000. Yeah, no shit. So that's basically $3,000 has taken us from 16 to 190. That's badass, Buffalo. You should change your X handle to Buffalo Grok because you saved me having to ask. All right, so the weekly, let's do the same thing. So the at the money put is 4 plus 5 is 9. Actually, that's going to get us, yeah, so about 925. Yeah, the price is at 161 plus 925 gets us to 170. Dude, you are the man. AB says, I've got 4 to 5K to add to Robinhood each month in free cash flow, most going to cash secured, leaps for next to months for position. Have some IBIT and strategy in there, but I'm leaving that in my long-term covered call, so cash secured puts in the wheel. You put on a seminar every day. Appreciate that, AB. You feel the same way I do about selling courses. Don't let the imposter syndrome kick in. You give great added value with transparency. Appreciate that. But you could do it small, open up subs on X for Discord access. Just need a good mod. Yeah, there's a there's added pressure there too of somebody taking your advice. They pay you for a course, somebody takes your advice, they get wrecked. Oh man, that would suck. So I'd almost rather do it for free and then for the vibes. A lot less pressure. It makes this a lot more fun, I think, probably too. All right, so these are not ready to roll, so we'll just do nothing. I looked at Tesla, right? Yeah. So my 167.50s, I thought I was about to get wrecked. When I saw strategy moving, I actually got very lucky that I put these calls on after we had already pumped to 155, 160. Where's the chart? I think that was on Friday. What was the high on Friday? Yeah, 160. I had waited till the afternoon, so I kind of got lucky with these entries on my covered calls. If I had entered in the morning when we were at 150, I'd already be bleeding. I kind of like every once in a while I'll guess. I kind of accidentally guessed right because Bitcoin was pumping Friday morning. So I thought, you know what, if I wait till the afternoon, maybe Bitcoin will drag strategy's price up. And really that's just getting lucky, kind of like flipping a coin, because Bitcoin could have crashed back down by the time I was done doing my chores anyway. So, but I kind of got lucky with these. They're not going against me terribly at the moment. Same with these. But at some point, I'm wondering if I'm going to have the balls to like call the bottom and take my covered calls off for some period of time. I'm really not scared of the price until we cross the 50-day moving average. Like, I don't believe in TA, but enough people do that it kind of matters because everyone is acting as if it does matter. So even though it doesn't really matter to me, I can't ignore that it matters to everyone else. And so this 50-day moving average, there are people in here like trading around it. And so I'm really not afraid of this price until we clear what right now. The 50-day is actually steadily decreasing as we stay under 200. But right now, I'm not afraid of strategy going nuclear until we clear 200. Like it's just stuck. It's stuck down here. Now, if Bitcoin pumps, of course, none of this, all of this shit is meaningless. Anyway, but I'm wondering if I'll have the nuts to just make a directional bet. You know, maybe once we get above and stay meaningfully above the 50, like then it's like, okay, there's room to fly back up to the 200. And then people are going to be trading around, are going to be trading between these two numbers. And then once we get meaningfully above the 200, now this moves above the 200. Now we get a golden cross, and then everybody gets bullish again, and everybody starts fucking FOMOing. And then, once we get all-time highs again, all bets are off. We're going to price discovery. Maybe Bitcoin's doing a Bitcoin thing. But I'm usually just trying not to remain too directional. But at some point over the next year and a year and a half, it seems like the money printing has to catch up to this fucking chart here. So I'll either, I don't know, I'll either nut up and take off some of these short positions, or maybe I'll try to just tiptoe and tap dance around rolling these things and see what I can get away with. That might be kind of fun too. And see how much almost kind of like, doing a speed run in Mario Brothers. Like, let me just see how close I can cut this shit and how much unlimited upside I can capture with the strikes. I don't know. It's kind of a fun game to play. All right, NYC says about 5 deep in the money call leaps, basically locking in a low share price plan to exercise all last week. Basically payment plan layaway. Yeah, I cannot argue with leaps. I mean, we're trading at 1 MNAV. And I mean, and even if it dropped to like 0.8 or 0.9, that's nothing compared to MNAV dropping from whatever the hell it was, 2.5 down to 1. Like, we've already diamond hands through the worst of this, I think. Like, I'm not necessarily calling the absolute bottom, and not that we can't, not that Bitcoin can't drop to 70 again before it rockets up for good. But yeah, if the days to expiration is long enough, I think we're in good hands at this point. And even if 2025 was the bear market, like we've already gutted it out through a year of it. So how much more bear could there even be? Yeah. But for now, I really just got to keep chipping away at this margin use. When I took all my margin use off in November of 2024, I didn't realize that it was affecting me psychologically. As soon as I got rid of my margin use, I was like, holy shit, I feel better. So it's more than just capital efficiency, like your state of mind. is pretty important as well. All right, so iron is pumping. I think I avoided having 100 shares called away last week. Sold another covered call for 3. Currently getting wrecked, but it's not out of the, or excuse me, it's not in the money yet. So nothing to do but just sit there and sit and wait. These mining stocks are pure premium plays. I'm not as bullish long term about these things as I am something like Strategy or even Tesla. It's just about capturing premium and compounding the profits that I'm collecting from the Tesla and the Strategy covered calls. So all of that money, this is an IRA too, so there's no margin use. So all of that, if I collect $1,000 in premium, I can't compound that if all I do is buy 5 shares of Strategy, right? It's going to take me 20 iterations of a 45-day trade to get another 100 shares of Strategy. So what I can do with that $1,000 though is go to something that costs about $1,000 and take that, if I collected $1,200, I could sell a cash secured put in CLSK. Or if I collect, if I've got enough buying power to sell a cash secured put in iron, then I sell iron. Okay, I've got a few more scraps left over. All right, I can sell a couple of cash secured puts in Cypher. That's kind of the point, is just making sure that I don't have a melting ice cube in the form of cash. That's kind of the point, is just always compounding by taking the premiums from the big positions and compounding them by collecting even more premium on top of premium. All right, nothing to do with iron. All these covered calls are getting wrecked as well. That's the other beauty of trading the wheel in an IRA, is every time you get exercised out of a position, you don't have to worry about the capital gains taxes in short term, long term. That is a bit of a drag on your profits running the wheel in a taxable account. Is if your 100 shares get called away under a year, if you haven't held them for a year, you're going to pay 30% capital gains taxes on it. So if your tax situation concerns you, then you could try to roll to avoid having shares called away. Sold this one for $1,500. It's worth $1,345. It's only been on for 5 days. This is not ready to roll. I decided I also wanted to take some long positions in Tesla, but I didn't have a lot of buying power. So I just went ahead. Tesla's very liquid. You can form all kinds of spreads without getting wrecked on the bid-ask spread. I started doing the same thing here, buying a couple of call debit spreads. But unfortunately, the liquidity, even though there's a ton of action in the options market for Strategy, the bid-ask spreads are still ass. So every time you add a leg to a spread, you're going to increase the amount of slippage getting into and out of those positions. So I probably won't be doing a lot of these spreads for Strategy. I'll just go ahead and suck it up and buy the cheapest 1080s or something that I can get my hands on. Performance cover call is not ready to roll, so none of this stuff is ready to roll. Doesn't look like. Yep, whole lot of nothing. IRA is clean. I'm going to skip that account. That's actually the old lady's account. I should have minimized it. All right, this is just my spending account. Did I deposit? No, I've got some cash I need to deposit in here. My fantasy football winnings. Something must have happened that I'm now using margin. So maybe I'll just sell a share of my what did I buy most recently? Bought some stretch. About SATA. Yeah, it really doesn't matter. It's all going to be under a year. But maybe I was trying to avoid washout roll. I can't remember. I kind of was like stacking both of these. But this is a similar situation, right? So this account technically cannot afford, if I was to be assigned all of these, that would be about $4,300, and I think this account's only worth like half of that. But since they didn't count this against me, I was like, all right, I'll just buy a bunch of these stable coins. But I don't want to be using margin, so actually this is ready to roll. It's almost there. I can hold off on this a little bit longer. But maybe I just will go ahead and sell one share of stretch since it's at par. I'll just sell one of these so that I'm not, yeah, I've got no margin use here. No official margin use. I'm technically trading with margin. But I'm trying to avoid assignment here. It does kind of bother me that this account doesn't have any strategy exposure or Tesla. I feel like I need to buy a couple of debit spreads or something here. So maybe when I roll these, if I have any buying power, maybe I'll see what I can do. Even though I was just bad mouthing strategy spreads, I kind of don't like that I don't have any exposure in this account. All right, that's it for Tasty. Been joking about Metaplanet needs to get on Robinhood, but they really do. So what happened over the weekend? Did I get something called away? Why do I have buying power? No, I really don't. Why does this say I have? Yeah, anyway. This is the real buying power. It's the cash minus the options collateral. So I really only have $47 worth of buying power here. Nothing really to do. This expires Friday. So this cipher position and this wolf position, I copy trade with my brother-in-law. This might be ready to roll. So we sold this one for 36. This actually hasn't changed in price. So we could probably roll this out for a break even. These are only 18 days away. Let's see what the cipher one is. I thought we sold this one for over $1. Yeah, $1.29. So we could actually roll this one for a credit. Wolf. Let me just see what would happen if I roll this out. 246. Yeah, I was kind of waiting this week because this expiration date is one of the monthlies and it's more liquid than the weekly. So if I was to try to roll this out to 11, yeah, I could get a credit for $30. Or if I want to be a little bit more aggressive and roll it to the 12, I could get an even bigger credit. Yeah, so I'll remind him that we got some stuff to do. The IBIT call for 130, 25 DTE here. If I roll this now, it's the same strike. 64 credit. me just see what that long call is worth. Yeah, 6. So I could technically roll this to the 6, or excuse me, the 61 strike. If I want more upside, I'm basically just ballparking this and adding its cost to the strike. 55 plus 645 would be the 2145 strike. So I could roll it to the 61, give myself a little bit more call away value. Still a reasonable credit, almost doubling the credit. And then sticking to a safe trade. So let's do that. I bet it's pretty liquid. You know what I should probably do? Because I bet it's BlackRock, right? They're kind of like the evil empire. Which one is Kathy Wood's Bitcoin ETF? Is it ARK B? I should probably dump that position and do something with ARK instead. And ARK is a little bit cheaper. So I could. Where is this? This is for June. I could probably go out to a Leaps. Do January 2028. I wouldn't hold this to expiration, but what's the IBIT option worth? It's only worth 600 bucks. Huh. So I can't quite afford this unless I take off I wonder what other positions I could take off. I think I have a couple of spreads in here. Or I could just buy something with a lot less time on it. All right, I was being getting myself a little bit excited. Okay, so I could buy potentially. So if I buy the 25, add those together, and I sell the 35. And if I collect about a fifth of this a week, that would be 14 bucks a week. It's about 1.5% returns a week. So that's not bad. Plus, if the price goes up, I could capture a good extra little bit. Yeah, but I'd have to do a little bit of. Oh, I have 4 SATA shares. I could totally make this work. Maybe I'll just do that now. Margin zeroed out is a cheat code. Yeah. All right. Yeah, I think I'm gonna do that. I think. All right, isn't IBIT BlackRock? Let's ask. Yeah, fuck those guys. Let's see. This is 130 and 618. So I've got to buy back my 130. and sell the 618 one. We are currently holding one contract for your pending orders. I have pending orders. Did I already try to roll this and forgot? Okay. Can only buy. Okay. Kind of pissed me off a little bit. What's this going to cost me to close? $50? Let's just sell all the SATA. $3 profit. 4 shares? No, not buy. Sell. All right. That should give me enough cash to close out this short call. Why does it say I have 0 contracts? Oh, because I already rolled it. Good Lord. All right, so it's not updating. There we go. Yeah, so I literally just rolled this, and I'm just going to close it. So that was a waste of my time. Probably lost a couple bucks in there. But it'll be worth it to get out of the BlackRock business. Now, the only thing that I should have checked is how liquid this is. Actually, it's not as good as BlackRock. It's probably not as heavily traded, but it's not terrible. Yeah, that is a little bit of a benefit to trading the most heavily traded one. The bid-ask spreads are very good. Still not wanting to give me a fill. Oh, there we go. Let's see what happens. Yeah. I might end up regretting this because of the liquidity on ARCB's options. Let's go to 9.35. This is this is starting to annoy me. If 9.5 doesn't fill, I may just call it a wrap. Let me give it one more chance. 9.55. 9.55. Let's see if they're listening to me. Nope. All right. So I'm not even placing that trade. That's just starting to piss me off. So I got a little bit overexcited, thinking that I would be able to just as easily get into an ARC B position as I bid. So that leaves me with what? $1,000? What's CLSK trading at? Oh, you know what we need to do as well? So this is gonna be fun. AB, close your eyes. So my average cost here is $1.43, and I've been bag holding on my Strive shares, waiting for this to happen, so I can finally get some covered call premium here. And like, these are penny stocks kind of territory, so this doesn't seem like much. I'm like, I'm getting $7. Like, what's the point of getting $7? That's putting up $100 in collateral to get $7 is 7%. 7% a week is 350% for the year. So even if Strive trades at $1 for the next 52 weeks, if this premium held, that would be 7 times 50. That would be $350 worth of premium collected on a $1 on a $100 position. So, is the real money holding Strive and waiting for Bitcoin to pump so that this goes to $5 or $10 a share? Yeah, probably. But this is still pretty kind of sick as well. And I think I have, I don't know, I think I got a couple of long calls here. Yeah, this one's only out to March, so this probably doesn't print. But I went ahead and bought some cheap $15 strike calls out to 2028. So this is just kind of fun, really. But when I first started running the wheel, selling cash secured puts and covered calls, there was a guy, God, what was the name of that weed stock? Anyway, it was trading between like $1 and $3 a share. And this guy had like $500,000 worth of this shit. And he was selling covered calls like at the money, earning 3 cents a week, which was 3%. Sometimes he would only earn like 2%. But like 2% of $500,000 is, was earning like 10 grand a week off of this stupid ass stock. I can't remember. I think that one actually went to shit at some point. And I don't know what happened to his position, but I mean, it was working for a while. So while this is available, I'm going to just go ahead and nab a few dollars. And now my cost basis is no longer $1.43. I've subtracted it by $7. My cost basis is $1.36. I'll forget that by next week, but I'll just keep chipping away at this. If Strive drops about down to 80 cents a share, then these will expire worthless, and I'll have at least scalped a few bucks. And really, these two covered calls that I just collected $14, I could now justify purchasing one more of these long calls. So I can use my short positions to add long positions. if I want to. But um, I'm reminded of a saying that this penny stock trader that I used to follow back when I was shitcoining. His name is Quick Fingers Luke, and he had this really good way of trading all of the different cryptos. But one kind of unrelated thing to that is he said that you always have to participate in the bounce. And so, like, if you're DCAing down here at 73 cents and you get a freaking 20% jump, like, you kind of have to be trimming this position, or at least, you don't have to exit the whole damn thing. But, like, even if you bought some at 2, wherever, 2, if you also bought some at 73, if you bought 100 shares at 2 and 100 shares at 73, your cost basis is 130. So it seems like selling at 1 is selling at a loss, but you can tell yourself whatever story you want. Like, you can convince yourself that you're selling the ones you bought at 73 and you're still holding the 2. You're still bag holding the shares that you bought for $2. So you can tell yourself whatever story you need to make this feel better. But it's not going to bother me if my cost basis is 140 and I end up getting these called away at $1. It's just, that shit happens, and it's not really the end of the world. When it's not the end of the world when your position is small enough that it's not the end of the world. And if it's not the end of the world, then your position size is probably too big. All right, so that was fun. I added that. So that gives me, oh. Oh yeah. I've got $1,030 of buying power. So I could add 2 credit spreads in Tesla, or I could try to find something that's about $1,000. I think this one's trading over, so the only thing I can afford, I guess I could go out to 45 days to expiration. Oops. And I could sell the 11. And I could sell the 10 too, but technically I could sell, yeah, I think I could sell the 11. Probably have just enough because I'm going to get paid almost $100 for this. Don't want to do that. Let's do it. Okay. So now I should have like $200 worth of buying power. Oh, I have $26 worth of buying power. Okay, even better. All right, cool. I'm not sitting on any melting ice cubes. All my cash is deployed. Limiting my upside for a greater chance of success. Also reasonably partaking in the unlimited upside. I think I got all the boxes checked. BITB and FBTC is the best because they're the most transparent with their holdings on chain. Okay, I'll keep that in mind. Right back at you, dude. We got to figure out, I don't know. Tim's always doing something. I need an excuse to come back up to New York. and maybe he'll have some kind of conference. Maybe he'll have another unconference. As well as FBTC is the second largest by volume. They might have better liquidity as well. Let's check it out. I've already spent my money, but oh, Fidelity. Okay. I kind of like Kathy. I like her Tesla research. A lot of people shit on her because Arc Innovation like went to shit after it mooned. Pretty tight. Yeah, it's got a good amount of volume, good amount of open interest. I'm just gonna guess that that's the strike I'll probably end up selling. I can't afford this, but I'm just gonna check it out. Let's go. Yeah, this would cost me about $4,000. It's not terribly liquid out here. That's a $4 bid-ask spread, no volume. Try something closer to the price. It's a little better at 60, but this is getting a little too risky at the $70 strike. Yeah. I'll just have to be happy on the sidelines. I'll just keep running the miners. You know what? I do need to add a. No, I have a couple of debit spreads in Tesla. Yeah, as soon as I can afford it, I probably do need to pick up some kind of debit spread and strategy. Oh, you know what? This one's for AB. I was playing around with the Strive debit spreads, and I was like, I probably won't get any, but this was just fun to think about. Like January 2028, I could even go with the 2027 ones, but like buying the 2 and even just like selling the 3, there's a ton of open interest here. These are actually fairly liquid. Like it would cost maybe to get a fill, I'd probably have to get closer to the fifth 14. But even if you just smash the ask, that would be like, you could probably get a fill at 10. Anyway, risking $13 to potentially get paid 87 is so like a 8x, 7x. Now you'd have to wait a year and a half or whatever, 2 years to get this. But like risking $15, potential 7x, this seems like I can't imagine a scenario that Strive is trading under $3 in 2028. That just seems like kicking a field goal from the 1. That's just kind of silly. All right, so they've already pumped. I mean, this chart looks like shit because it's it's lower highs and lower lows. But when it FOMOs, it pumps. And so Bitcoin does a thing. How does this stay under $3? I'm not saying it's free money, but it just does seem kind of silly that you could get this kind of exposure for pocket change. And even like the 2.5. Yeah, this is barely more expensive, and it's a lot wider. So this is risking 17 potentially to get 280. That's like a 15x. Um, wait, how much money do I have? Maybe I'll get one. I think I have, what, I have like $20 or something. So I do have to be careful. Like if I don't have enough cash to even roll my fucking calls, I gotta be careful. But yeah, I've got $26. This might be fun to just get one. Let's see if I can get filled at $14. No, probably gonna come up to at least 15. Maybe 16 to get this done. I don't know. I might have to smash the ask. Yep. This is probably me. I'm the single bidder at 33. All right, let's pay it. This should fill. Unless the market makers are lying to me. There we go. Okay. So that'll be fun. But now I have no monies. No monies left. What's up, Howard? Agree with your basic premise that I don't want my money to be anything other than money. Love to hear it. No, it's not your average penny stock. That's for sure. Pennies backed by Bitcoin. It's not pennies minted on top of copper. It's pennies minted with Bitcoin. 24,000 shares at $1. Have about 2,700 shares coming. Feel leaps now to cover leverage upside while I start selling cash secured puts again after March. Afraid to sell. Yeah, same. But I mean, my position's so small that this is just kind of meaningless. It's almost kind of for the lulls. Appreciate that. Let's see. You saw me going nuts looking at Strive options. Yeah. Yeah, man. Your analysis got some things percolating in the back of my brain, and every time I take a look, I'm just like, it seems I don't know. I think we use mispriced a little too often, but I don't know how else to say it. Important part is that the Bitcoin being added from the potential similar merger is really valuable Bitcoin because it was purchased before the last halving and has superior coordinate on the blockchain. They will also have real free cash flow. This is why I'm allocating before and after the meeting. I got my fingers crossed, dude face. All right, appreciate you guys for tuning in. Hope everybody is having a good new year. Enjoy being up for the year while it lasts. And